Welcome to Hot Topics on the Edge of Show. I'm January Jones. Today I'm joined by Ben Schiller, CoinDesk's managing editor for Features and Opinion. Thanks for being here, Ben.
Good to be here, January. Thanks for having me.
Yeah, coming up today, we're going to talk about Bitcoin Treasury growth, the Fed rebanking crypto, and we'll also hear from Ben about the latest news with CoinDesk's. This is another production of The Edge of Company, a rapidly growing media ecosystem empowering the pioneers of Web3 technology, culture, and innovation. All right, let's kick this off. Something we've been covering more and more every month are these Bitcoin treasury growths. So Bitcoin treasury strategies are expanding. There's lots of estimates out there. It's hard to get the exact numbers, but some people are saying about 150 public companies are trying to hold Bitcoin reserves right now. This week, it was announced that ProCap Financial is a new company coming in, and they want to hold $1 billion in Bitcoin. Also this week, Van Eck issued a report saying that companies accumulating Bitcoin by issuing new shares or taking on debt risk can possibly be eroding shareholder value. So we're having this growth. At the same time, there's some real institutional warnings coming through. Ben, you've been covering this. The stories on CoinDesk are like more and more every week, right? With new corporate adoption. What are you seeing as these overall trends and then some of the risks companies are actually embracing?
Right. So, just to give a bit of backstory here, this obviously comes from Michael Saylor and what formerly was known as MicroStrategy, now Strategy. This strategy of accumulating basically as much Bitcoin as possible and using a public market strategy to raise more money, issue shares or issue debt, and to buy more Bitcoin. And it's all on the proviso or the understanding that Bitcoin is going to keep rising or at least maintain a certain level. So we've seen a lot of other companies come along and copy the Saylor playbook, starting with this very big entity in Japan called Metaplanet. There was another one called Semler Scientific. So this is an existing company. This is not like a new company. This is an existing publicly traded company that basically decides to accumulate Bitcoin on its balance sheet as a strategy for its growth. The worry raised by Van Eck and actually by some others as well is that because there are so many companies now doing this, publicly traded companies, and in a lot of cases, a company was set up for a completely different purpose, like, it was a jewelry company or it was a car company, and then they kind of repurpose those companies as Bitcoin vehicles or digital asset vehicles. What the issues raised by Van Eck and others is that there's so many of these companies that simply, they can't all succeed. There is a kind of copycat scenario, and as we've seen many times in the history of crypto, when there is this kind of flood of people into an idea, it kind of dilutes the value of that idea. And so, when you have 150 companies following basically the same strategy, then at some point it's going to lose its value. And in the case of Semler Scientific, which was a scientific, equipment company that became a Bitcoin vehicle company, their share price has fallen quite precipitously recently, I think up to 45%, even as the value of Bitcoin traded on a normal market has been going up. So people say, well, why invest in Semler when I can just invest in Bitcoin and my returns would be better than investing in Bitcoin via this public company method? So that's a big question. And now, obviously, it's not just Bitcoin. So I'm going on a bit here. But it's obviously not just Bitcoin. Now we have, Ethereum vehicles or Ether vehicles, which are following the same playbook. There's talk of some Solana digital asset treasuries. There's even an acronym for them, DATs now, and some others as well, multi-asset treasury vehicles as well. So I think, personally speaking, and just to go into kind of opinion mode here, I think this is kind of a lot of people jumping on a bandwagon that looked good when Saylor was talking about it, but I think there are a lot of risks. And as somebody I respect said this week, Nick Carter is a very sage observer of the crypto markets. He said, he said, quote, if you're a venture capitalist um, investing purely into Bitcoin, a digital asset, treasury vehicles as a strategy, then you should get your money taken away because this is not very imaginative kind of and arguably not even crypto at all, right? Because you're just like taking this asset that's out there, you're accumulating it in a fund and hope that the price goes up. And okay, there's some kind of clever kind of financial innovation behind it, but as crypto strictly, this isn't really innovation. It's just like taking an asset and trying to get as much of it as possible. It's not really like very thoughtful, really. So
Well, branching that out, though, like you said, to other coins, right? Because the thing that everyone is hearing is like, just get Bitcoin, right? But you are seeing this bandwagon, and so you did mention some of those other coins being accumulated in just a crypto reserve, right?
yeah.
And so, what are you thinking about that? Like, in fact, is this institutional move towards Bitcoin really good? Like, it's hot altcoin summer?
Well, yeah, I mean, I think in terms of institutional adoption, I think this is a bit like ETFs, right? It's a good thing for crypto because this is TradFi reaching out across the chasm that used to be there and embracing crypto as the future. So at that kind of level of thinking, then that's a good thing. But as a financial investment, do I think that just collecting um, different assets and hope they go up. Is that a good strategy? I don't know if that's very imaginative, really. Um, and I think we're kind of beyond the point. A year ago or 2 years ago, the crypto industry was glad when TradFi Wall Street paid attention when it invested and sent a signal that this was a good thing. But we're kind of beyond that moment where we're looking for a signal of, hey, can you please take us seriously, Wall Street? We're now in the point where we should really be embracing what the potential is for crypto, which is really as like financial technology. And this, in my opinion, collecting Bitcoin in a treasury vehicle isn't really embracing the technology of blockchain, the technology of crypto. It is just a dumb like, let's try and get as much of this as we can type strategy. And maybe in 100 years, when there's no Bitcoin left, then the companies with the most Bitcoin will win the race. But I don't know if it's kind of as a short-term strategy, which is what we're talking about here, it's really going to work out for a lot of companies. And I could see in 6 months, a year's time, that a significant number of those 150 companies that have followed this strategy will be not doing that well, would be my guess.
And we are hearing that some are looking into other coins as well, right? But that's kind of just less sexy right now, and they're more volatile. So the utility though of some of the other coins, what do you think about that? Because you said this is just holding value, right? Like if um, companies are acquiring more of a crypto reserve, what is the utilitarian value of acquiring things other than Bitcoin?
Well, obviously, Bitcoin is known. Its use case is mainly as a store of value, i.e., it's an asset that we can trust the issuance around, the scarcity of. It has a fixed issuance, which is very important for maintaining its value and maintaining people's trust in its value over time. Other cryptos don't have that, but they have other things that are of value. So Solana has a lot of DeFi activity on it, has a lot of meme coin activity on it, has a lot of other use cases that involve the use of Solana and would indicate that the value of Sol would go up over time. So you could make a case for Solana being valuable over time, or Ether. There are uses of Ether and certainly uses of Ethereum as a network that would indicate that it might be useful to bank Ether in a treasury vehicle like this. But I think Bitcoin is the main one because it is like gold. So in the same way that traditionally people will hoard gold, they're now hoarding digital gold in these Bitcoin treasury vehicles. And I think this my own opinion is that I think this is what happens a lot in crypto, right? That there's a good idea over here, which is to have the micro strategy, the strategy, and then it kind of gets slowly kind of leaked or transmuted into these kind of other areas. Now we have these other coins until you have this situation where people are just accumulating random coins that don't have the same strategic intent that Bitcoin has. So why accumulate a non-store of value use case coin in a treasury vehicle? I don't know. Is that does that does that really make sense? I don't know.
I mean, everyone is experimenting with this, right? But like you said, there's been kind of one message, which has just been get Bitcoin. And I saw that at the Bitcoin conference as well. We were just all there in Vegas. So,
Yeah.
well, moving on, relatedly, we're talking about this, general adoption of crypto. And finally, the Federal Reserve has removed this rule about reputational risk from its bank supervision rules. And so this eliminates a major barrier that discouraged banks from serving crypto companies and often led to debanking essentially in this industry. So this opens the door for traditional banks to have crypto clients. It also, combined with the Genius Act, is opening the door even further for banks to start issuing stablecoins, right? And
Absolutely.
so now that they have the green light, crypto getting a corporate makeover. What are your thoughts about this?
Well, I mean, this was obviously a major bugbear of the previous administration. Many uh, examples of crypto companies being debanked, particularly during the Signature and Silicon Valley Bank crises, which led to a pretty under the hood sort of effort by the Biden administration to make sure that crypto companies could not get access to the credit and the financial lifeblood that they needed from the mainstream banking sector. So when the Trump administration came in, this was one of the number one, um, you know, asks of the crypto industry to reduce the barriers to accessing, banking services, and that's very much what we've seen. And the Federal Reserve is the only the latest institution to allow this. There's also the OCC, which is the main banking regulator. It's also put out a number of new proclamations about not requiring pre-clearance of banking relationships. So it used to be if you were a crypto company or a bank, then you had to go to the regulator and say, well, we're talking to this crypto company about potentially having a banking relationship. Are you okay with that? That's what you would need to do before entering that relationship. Now those companies don't have to do that. They don't get to get prior assent from the regulator to do that. And the Fed is basically backing up what the OCC has said previously in a number of announcements over the last few months. So that's very important for, again, as you say, the institutional adoption of crypto. And it kind of sends, I think, a more subtle message that it's kind of okay to be in to do crypto. So it's like it's not only the actual, you know, announcement itself, it's also the kind of the wider kind of messaging here that to say that it's okay for people who have been skeptical in the past about crypto to now be in on crypto.
Well, you've been at CoinDesk many years, right? And so this has been one of the complaints of crypto. They don't get us. We're not legitimate. We can't bank, not seen as legitimacy. And so, you know, over think about 8 years ago when you got going at CoinDesk, what the dreams of crypto are versus where we are today. I mean, were your hopes and dreams, as an industry and also as a publication, that high? Did you ever really think that it would come around full circle where we are just this month, with all this historic regulation all kind of coming together to open the door for crypto to just be part of the American economy?
Uh, I mean, in some ways, we did hope that, and we did expect that. And in some ways, I think it took longer than we might have hoped. I don't think anyone could have foreseen that it would happen on the back of a second Trump administration. Um, I think there are a number of ways in which it was sort of unexpected, but I think most people in crypto, um, stacked up the kind of logic that the logic of crypto, the fact that it is just fundamentally better money. I mean, a stable coin, for instance, it's fundamentally, a dollar on a blockchain, which is what a stable coin is fundamentally a better dollar than a dollar in your pocket. It's programmable, it's tradable, it's exchangeable, it's sendable to anyone in the world in microseconds. So it's fundamentally better money. So you would think that the logic of better technology would eventually win out and to have its day. So, and I think the reason why it didn't was basically because of regulation, basically because of um, all these kind of reputational problems in the industry, which really held crypto back from taking on a more formal role in the financial economy. But yeah, I think I always expected it to happen, but it's hard to predict exactly how it would happen.
Right. Careful what you wish for and how it ends
Yeah,
up manifesting, right?
yeah, and I think as you know as well, Jerry, you've been in space a while too. So, there's been a lot of ups and downs, and we've taken a lot of, there's been a lot of scams, there's been a lot of chicanery to go with the innovation and the progress. So I think it's always had that kind of double-edged nature to it.
Yeah, well, let's talk about that a bit in the terms of what's going on at CoinDesk. So here you guys are covering, all the things that you had hoped years ago would happen. But on the same side, it's easy to get caught up in that breaking news, right? Um, what are you thinking about at CoinDesk as kind of like a longer term strategy about how you're looking at content and what kind of stories you really think might be more important now, given we've kind of moved over this hump of just accept us to CoinDesk being one of the premier, if not the premier, crypto journalism organization that is looking over the industry, in a much broader way.
Yeah, I mean, well, a couple of different questions there. I mean, there's the question of the actual media business model. So, very much like focusing on improving the operational way in which we do things at CoinDesk, and that includes using AI much more heavily, helping our reporters to report on stories, to get information out using AI technology. And I think, we're in line with a lot of other media companies in doing that, making our journalists more effective using modern technology. In terms of what we're covering, I think this kind of market cycle of the last year or 18 months since really the approval of ETFs at the beginning of 2024, it's been very much a story of institutional adoption. We've been talking a lot about it in the
Yeah.
podcast. What I'm looking forward to is seeing some of the other subjects that are big potential themes in crypto and were almost kind of big innovation stories in previous cycles. What's going to happen to them in the next cycle? So, for instance, the whole conversation about NFTs, for instance, would tend to be sort of rather panned in the last cycle because a lot of people lost a lot of money, and everyone says, well, the NFT boom died. But I mean, the fundamental kind of process of wrapping something with a digital wrapper and being able to trade it and turning it into token is still a good fundamental idea and was always a good idea. And tokenization is taking off in finance. So I'm interested to see the kind of the comeback of that story. Gaming is another thing. There's been a lot of money that gone into Web3 gaming, other sort of models of gaming. So we know that gaming is a very big thing in the world. So everyone's kind of looking to see how that will play out. Will Web3 gaming become a thing? The whole aspect of AI and crypto, the kind of collision there is very interesting. I think there's a lot of heat and activity around projects like Bitenza, for instance, which is a marketplace for AI. Um, you know, Lots of AI related intelligence activities. A huge kind of hugely interesting. So I would pick out those three things: NFTs or whatever we call NFTs in the future, Web3 gaming, and AI compute or decentralized AI in projects like Potenza. I think those are the three I would pick out as interesting ones to watch.
Yeah, and way more angles to cover because, on the weekly news cycle, we've just been so obsessed with the regulatory changes, right? And everything that's going on politically. I mean, it'll be good to like have the news cycle open up a little bit so we can get back to innovation, product, and all this part real world adoption and use cases that relate to your average person, right? For crypto as it becomes, part of culture and economy in a much more mainstream way.
Exactly, and I think after the big crash of 2022, I think there was a real retreat to what people knew, to what worked. And it's a bit like when Hollywood has a successful film, rather than thinking about, well, let's come up with another film idea, they say, well, let's create a sequel. And I think that's what's happening with these treasuries, right? It's like rather than come up with a new idea to make money, we're just going to keep doing the same thing, and that's what we're seeing with treasury, and also I think with infrastructure generally. Like, so there were some successful L2s, and then everyone said, oh, let's have our own L2. So now we have 150 L2s. Can the market support 150 L2s? Probably not. So I think what's interesting is, like, will investors and also users kind of seek out actually genuinely new things in crypto? That's what I think we're really looking for. And I think as an industry, we should be broadly supporting as well, because anyone can copy somebody else's idea and make money, but that's not really why we're here.
Right. Fast and Furious 10, right?
Right.
Yeah.
Exactly.
Actually, that's a really good one for Bitcoin, isn't it? Fast and Furious. So,
Exactly. So,
well, that's going to wrap up our time today for the Edge of Show on Hot Topics. Ben, thanks for joining us. We covered Bitcoin Treasury growth, the Fed rebanking crypto, and caught up with some direction on CoinDesk over the next year. Join the conversation on social and let us know what is a hot topic for crypto in you. I'm January. Stay curious, keep pushing boundaries, and don't forget to subscribe on YouTube, Apple Podcasts, or Spotify so you never miss what's next on the Edge of Show.